Welcome, Earl, to the Leaders Summit and your Australian audience. This is an excellent opportunity for us to learn about how New Zealand markets retirement living, assisted living, and residential aged care. So I was wondering if you could just give a quick overview of the model that you market at Metlifecare in New Zealand, please.
Sure, thanks, Chris. And look, it's obviously an honour to be part of the summit. Thanks for having me as a Kiwi. So the model in New Zealand has been developed over a number of sort of decades. Historically, retirement villages were independent living, lifestyle type of villages, and aged residential care was obviously owned quite separately, operated separately, a bit like perhaps the traditional approach in Australia. Over the last sort of 15 or so years, the concept of a continuum of care has become a key customer value proposition in New Zealand. So a retirement village that also offers aged residential care and other forms of living assistance that we call service departments, where so residents can buy an independent living unit, live a largely independent lifestyle with access to the community facilities, and when they need some assistance with living, could either move into the aged residential care facility and remain on the site, or if they only need a little bit of assistance, they could move into a service department, and that would provide them with a daily meal or cleaning or laundry services, etc. So that full continuum has certainly become a feature of the New Zealand retirement village sector for as I say, for at least the last 12 to 15 years. Just about every village that's built nowadays certainly has an aged care facility on it. And as I say, it provides an excellent transition of the resident, right through to the end of life. The model has evolved over years. The funding streams have evolved. Some of those have been sort of from a regulatory perspective, but many of them have been driven by the private sector. So the concept of who funds the care bed, the obviously private funding to come into a retirement village. But then as you move through the system, various forms of funding may be available to residents depending on their net worth. At the moment, the retirement village sector has around 14% of over 70-year-olds living in it. And that's grown from around 6% in 2008. So, certainly a very popular living option for over 70-year-olds. And in terms of care, now that the sector has grown and individuals have, moved into retirement villages, the amount of the sector covered, the amount of the sort of aged care beds that are operated by retirement village operators have increased exponentially. Over half of the beds are now in New Zealand are now provided on retirement village sites.
So we can just go over that because it's very important. So in 15 years, approximately 15 years, you've gone from 6% penetration via retirement villages to 14% penetration.
Yep.
And if I've got my facts right, in parts of north of Auckland and so on, it can be as high as 20% of the local population over 75 years of age are in retirement villages.
Yeah, that's right. And that's a reflection of the local communities. I mean, the Bay of Plenty region is a very popular retirement sort of destination, the top of the South Island as well, and the penetration rates in those regions of the country, as you say, are materially higher, up in the 20% plus range.
So for our audience sake, if we can just explain the concept of a premium room and also that daily, the government supplied daily fee, that's a fixed $230 a day or thereabouts?
Yeah, that's for high level. For low level, so high level care we call hospital level care. For low level, we call rest home level care. The rest home fee is around $145 a day, and the hospital, as you say, is around $240. They are fixed daily care fees that an operator is unable to charge any more for. So that's obviously for services, for the staffing, for meals, and the like. What the operator can do on a pure private charge basis is charge a premium fee for the accommodation. So if the operator has a very old site and the rooms are what we call standard rooms, so they typically will not have an ensuite, and may have shared toilet facilities, showers, etc., and be relatively small, somewhere between sort of 13 square metres, 12 to 13 square metres, then that would be a standard room, and the operator could only charge the fixed daily care fee for that. However, if it's a retirement village operator typically, and we're building a new care home, and we're building obviously rooms that are more appealing to retirement, to rest home or to care residents, then we would be building rooms with en suites, rooms that are bigger, and in some cases may have a balcony, etc. So far more premium. And in that case, we can add a co-payment that is purely resident paid, privately paid, and very importantly, those fees are not regulated. So the operator can effectively charge a market rate in that. And if the operator wants to charge $100 per day per bed, they can. It's up to, obviously, the operator whether there's any residents in the area that are prepared to pay that level. Typically, the premium charges will sit somewhere between the sort of $30, $50 up to maybe $80 a day. Very infrequent would they be over that.
So the New Zealand consumer has now been educated that they need to pay for aged care, really. Is that a
by and large? Yeah, I mean, by and large, the average consumer will know that the government is not going to look after me, and when I need care, that I will need to contribute something towards it. I would say the concept of paying more for a premium room is certainly something that is becoming more aware. There's very few beds being built under just the government funding model, and that's because it's wholly inadequate to compensate for the capital cost of building the room. And I must say the other feature, the other type of premium charge, sorry to interrupt, is a capital sum. It has some similarities to the RAD concept in Australia, where operators, rather than charge a daily premium fee for the room, they will ask the incoming resident to pay one lump sum, a capital sum, which is then returned to the resident when they leave, less a deferred management fee. So pretty much exactly the same occupation right model as applies in the retirement village context. And that's becoming a more popular form of premium funding of these rooms.
And as you're indicating, my understanding is that it's approximately 10 years since a standard room has really been built, apart from one or two minor single standing facilities. All the beds in the last 10 years have been built in retirement villages.
Yes, that's right. That's right. I mean, I think there's only around 23% of care beds that are in standalone aged care facilities now across the entire sector. So that gives you an idea of how much care is actually being provided by the retirement village community. And
the asset threshold is an interesting concept. To put it into perspective for the Australian audience, your requirement for you to contribute to your residential aged care is means tested, and there is an asset threshold which includes the family home, yes, which is approximately $240,000. So if you have wealth, including the family home, over $240,000, you are required to contribute to your residential aged care.
That's correct. So that fixed daily care fee that I referred to, you are required to contribute to that as well. So if you have as you say, even the family home, which I know is different in the Australian context, that even the family home goes into that equation. So as soon as you have assets over that relatively modest level, you'll be contributing towards that, the 145 rest home level rate. The government always pays the difference between the rest home and the hospital rate, so that's always covered by government funding. But that a resident with a large amount of assets could find themselves paying all of that daily care fee, all of the 145 plus the premium fee on top of that. So, absolutely, that is a standard feature of our aged care market.
So it could be $145 plus $80 a day, by way of example. So
Correct.
$225 a day.
Yep.
And the average time of occupancy of an aged care bed in New Zealand, do you have a number there?
Yeah, it's about, it's anywhere between 1.5 to sort of 1.8 years.
But the government does have a loan program that I understand, an interest-free loan program, so you can, the government will lend you the money with your house as a security, and then when you do leave the bed, they will come in and collect it.
That's exactly right.
I did notice, inspecting a couple of sites, including your own, that the satisfaction levels for the satisfaction ratings that are put on various websites are indicating 95%, 90%, 92% satisfaction for aged care residents.
Yeah, and that is reflective again of the fact that, given the premium model, we are able to produce, exceptionally nice care rooms. The rooms that we're looking to build at Metlifecare are, 35 square metres. They actually have a separate bedroom with a small living area, a small kitchenette, a balcony, and obviously a full ensuite. And, they're very attractive propositions for incoming residents. They would have to pay a capital sum, as I say, to move into them. But if you think about an average resident, even in a retirement village context, even if they've paid, $600,000 for their unit, which is very low, they've had a 30% fee, which means they're getting, $420 back at the end of it. They would, we may take $300 of that $420 for moving into a premium care room of what I've described. And then when they exit that room, less the deferred fee off that room, they would, come out with $210. So in that, scenario, for example, they've freed up 420 less 300 in that first transfer. That's 120 plus the 210. So that's the capital remaining at the end. And, if they've exited the care room, that's typically going to their estate. But, they're very affordable. And as I say, incredibly attractive propositions for residents with that level of capital, which, given the property market in New Zealand over the last 5 years, is very affordable to the average elderly person. So that is why effectively those rooms are being built. And as I said, a key part of the customer value proposition for retirement village operators. It's something that when I've travelled internationally and spoken about the sector, it's something that really stands it apart, is that the sector is always sort of one step ahead of that scrutiny around so concepts of capital loss sharing were ironed out of the industry a good 7 years ago. And then it's almost becoming a self-regulating industry. So the retirement village operators themselves are driving regulatory change to keep the consumer appeal high.
So when you say the sector is tight, my understanding is that nearly every operator is a member of the Retirement Village Association.
That's right. So one national industry group, the Retirement Villages Association. The executive comprises 11 of the CEOs of the larger operators, a few smaller operators amongst that, but and therefore there's a very, very strong voice at the table. It has a interface with a resident lobby group, so it has one ear to the voice of what the residents are saying, but obviously close ministerial relationships with the key government ministers around housing and health, etc.
And if we were to summarise as we come to the end, the primary attraction for retirement villages has been that the one move promise. You move into a retirement village and you will carry through to the end.
Yeah, as I said, the concept of a continuum of care is what we call it. Over time, what it's meant is that the retirement village operators actually now provide the majority of aged residential care beds in New Zealand.
And it has been successful in instituting a co-contribution model.
It has, and again, to emphasise, has been driven by the public sector. So that's not been a regulatory review that has decided we need to come up with a way that operators can build aged care beds. The operators have wanted to build aged care beds because of that appeal of the continuum of care, and have, through their negotiations with the regulator, through the district health boards in New Zealand, have formed an agreement that a premium private charge can be made. So that concept has been in the New Zealand market for sort of 10 odd years now. And as I say, over the last sort of 5 to 7 years, the concept of this capital sum has also emerged. So both of those types of funding are now available to operators, which provides the required returns in aged care to enable those rooms to be built, which, as you said, in turn means that there are some very attractive care options available for residents.
Well, look, that's greatly appreciated, that explanation. It's answered a lot of questions for me, and I'm sure that's for our audience. So, well,
thank you
very much for your time, and we look forward to seeing you in Australia.
Thank you. Look forward to being there. Cheers.